go ahead and show you what I mean here. And again, I don't want to make this the heart of the discussion because it really shouldn't be, but let me just address this gap. Again, gaps are literally spaces within the price action where, again, this was the Friday, this is April 9th, so this was last Friday, and then the 12th, of course, was Monday. So this is the 9th to the 12th, so this was basically the Friday evening to the Sunday afternoon, and sometimes if there is enough opinion in the market where people felt that there's a reason to be very, very bullish, we'll gap. Or if there's a reason to be very, very bearish, we'll gap down. This is known as a gap up. And what you see here is no trades occurred between these two prices. That's why they call it a gap. So the first question was, how does it affect my indicator? Well, obviously, for moving averages, and this isn't distorted, okay? I don't believe it's distorting it, okay? So what I feel happens is because we gapped up, there's a very, very bullish impact on the indicator. And you know what? There should be, because it was a very, very bullish impact on price action. So I don't believe the gap is necessarily going to be a problem here for me in terms of what I am expecting the wave to communicate. Was there a very bullish move? Yes. Is that going to steepen the wave and give me a more bullish reading of my market cycle? Absolutely. So I don't see that as a problem. As far as moving forward, how we deal with this space, and gaps are like windows. They like to be closed. That's the general consensus. So what you'll find is on the way up, this area here and this area here automatically become support and resistance. So when I say the window likes to be closed, eventually price action will come, and this is the way charting theory goes. At some point will come and close the window, close the gap by trading down to where the gap up began. Okay, that's the way these gaps will sometimes. I mean, again, this is not a common scenario. This is not something you need to necessarily contend with very often, but it's good to know some of the general rules surrounding gaps and how they can affect the wave. And again, I don't see it as a problem for the wave at all. In fact, the wave will just simply reflect that extreme bullishness or extreme bearishness. And just remember that window theory and the fact that the gap is essentially just support and resistance. Don't overcomplicate it. Okay, there's your two levels. This is the window, so to speak, the gap. And prices typically want to come and close. That's it in a nutshell.